Hello everyone, I thought I'd give you a little bit of the broader spectrum if you like. I have to go and find my place. I hope this works for you. I like to feel amongst it. It's been an interesting day in Australia. We've had second quarter GDP, which a lot of people thought would be a negative number. We never did. I always thought QT would be a positive number, but a lower number obviously falling away, and that's exactly what it was, just up 0.7% for the quarter. And I've always forecast Q3 will be negative and Q4 will be negative. Whereas most other houses are forecasting just negative in Q3. And some thought Q2 would be negative, but of course that was never going to happen. So I'm seeing Q3, Q4 is the recession, and I'm seeing risk of that extending into Q1. Now on the other side of the coin, there's all this excitement. The Australian AI Group Manufacturing Index PMI came out today and it was well down, falling away very sharply. And it suggests the Australian economy, as a whole lot of other data has recently, the Australian economy was already rolling over and in trouble before the lockdowns. Now, I forecast that some time ago, that rolling over process, and it was based on, even before we came out of the initial lockdowns, I said we'll have this spurt and then we'll have this rollover. And it was because of the bringing forward of future economic activity into last year. So basically all the stimulus measures, and there were many, access to superannuation, all those sorts of things, JobKeeper, get your renovations done, all those sorts of things, all the restaurants, hospitality, saying anything we were going to do in the next 2 to 3 years, let's do now while we're closed anyway. All of that activity was brought forward out of the next 2-3 years into last year, hence very strong economic performance last year. High employment, which I didn't read in advance, I got that wrong, and that was driven by the fact, of course, there were no travellers, no overseas students, and therefore no immigration, and therefore not a lot of people coming into the country to take up employment, meant that those in the country would experience a higher level of employment. I did not see that one coming, but that's what happened. Again though, it's a sucking forward of economic activity into that past year, so we were having a rollover, we were going to be in trouble now, forecast we would be in trouble now, even without lockdowns. Now that we have lockdowns, the Australian economy is in diabolical trouble. For people to suggest there's going to be a quick rebound from this, no, there isn't. I've gone over that at length. Why? Basically, again, all the economic activity has been sucked forward into the previous year. People have enough sofas and new TVs and new computers for the home office. There's not going to be that buying spree. There isn't the JobKeeper aspect. There isn't the access to superannuation that so many people undertook. So no, there isn't going to be a shopping spree this time coming out of this. There will be an uptick in the data. There'll be a sharp upward spike that everyone will get excited about, but it won't last because it isn't like last time. It's very different, and we're in serious trouble in Australia. Most of the Australian economy is in a lockdown situation. It's lucky some of us can come out and enjoy the sunshine, but the rest of the time we are all working very hard at home. The outlook for markets is the Australian stock market is starting to see sense. It is tiring. It is showing signs of rejecting rallies. It's going to be volatile sideways here for a few days, but I do suggest there is significant risk still of a falling away to the downside for the Australian stock market. When it comes to the Australian dollar, well, all the good news, as good as it gets, has already happened. We saw those great numbers yesterday for Australia in terms of exports. That's all over now. Well, it's not all over. We're going to continue to have high export numbers, but probably not as good as what we have seen. So the Australian dollar is at risk on that front. It is at risk on the domestic economic front as well. So we can expect to see it fall away from this attempted bounce that it's experiencing at the moment. I continue to argue you should be actively managing the downside risk potential for your investments in Australia. That could start to play into the property market, but not so much as a downside risk as a definite plateauing. Again, once everyone who wants to buy a market has, particularly in the housing market, if everyone's bought everyone has these great investment portfolios, but there isn't immigration, there isn't foreign students. It does put downward pressure on rental incomes. So landlords can charge as much as they want, put a sticker price as high as they want, but there have to be people who will accept those sticker prices. And I think we're going to see in the house price market some correction due to the fact that it is harder to rent properties than people had expected when they leveraged up and expanded their property portfolios rather aggressively in the last 12 to 18 months. But I do think it's the stock market. Currency's already had a big sell-off, and I did say we'd probably see support around 72 cents, but I still think the target is 70 cents. We said that on television at 7745 that the Aussie was going to go to 70 cents. At that time, everyone was still bullish. And everyone thought we were a little bit crazy. But again, we've been proven correct because it's about looking out the window and applying common sense to what's going on in the world. And if you do that at the moment with New South Wales policy and Victoria's creeping policy on the COVID situation, we all want to open up. But if we don't go about it in the right way, in 6 to 9 months' time, we could be back in lockdown again. How devastating would that be for the economy? Too much haste in opening up could well see us in 6 to 9 months' time having hospitalisation rates that are 2, 3, even 5 times what they are now. And in that environment, it wouldn't matter if we're 100% vaccinated. If you have hospitalisations in the 2 to 5,000 range, you're not going to want state premiers allowing access to New South Wales people to their own states. And you're even going to have the New South Wales government again forced into a corner to reintroduce lockdowns in some form. So the outlook is not a clear path. There are risks to this plan as outlined by the Premier today in New South Wales, and inviting aggressive almost international travel into the state is something probably other state premiers are going to lobby against. Again, I'm not saying I'm for or pro anything, I'm just reading the tea leaves, and the tea leaves do look like there are a lot of risks with this current policy. It's based on a total belief that vaccines will work, and all around the world that hasn't been the case, except where the vaccinations are new, because the vaccinations have their maximum effect for the first sort of 2 to 4 months, and then they're dropping away the whole time. But by 6 months, they can be as low as 16 or 32%, depending on what study you look at. And at that stage, you're going to have a lot of vaccinated people going into hospital. So it's not a clear path at all. And I do think, I mean, not that you should listen to me, but my own favourite view is if everyone strictly wore masks, that would perhaps be as effective or even more effective. But anyway, a lot of people would disagree with me, and I'm sure you might be one of those people. But I think it requires getting on top of this, minimalising hospitalisations so that the economy can stay open, so that businesses can function relatively normally, does require more than just a vaccination policy reliance. So I think people are being set up for disappointment further down the track if hospitalisations spike, and people are being disappointed in terms of how quickly freedoms come to light due to the double vaccinations, even if we do hit 70%, and we're only a little over halfway in getting there as we are. By the time we get there, the first sort of 10 to 20 or even 30% of people who got vaccinated are going to have very low levels of efficacy. So vaccinations are good, they're a great help, but they aren't a sole solution in the way that some governments are currently treating them, in almost sort of disavowing the evidence being seen in other parts of the world, such as the United States, even the United Kingdom, and in Israel and other places where vaccinations have been in place for a long period of time. They're getting fresh hospitalisation surges. And for Australian governments to ignore that fact, I think leaves us open to risk of unbelievably, perhaps in 6 to 9 months, having to have lockdowns again. So I'm just suggesting a great deal of caution on that front. I'm also suggesting in terms of the economy, where we are, despite this opening up policy, still at risk of recession. I'm still calling a recession Q3, Q4. I think the long-term damage that has been done to the Australian economy already, it's already in place, it's already long-term, in the sense that some small and medium-term medium-sized businesses have already been driven to the wall. And in terms of the owners of these businesses not wanting to stress their own families any further, they've decided it might be time to permanently quit what they previously did. That is long-term sustained damage to the employment outlook for Australia, and it is long-term sustained damage to the consumer spending power going forward. And certainly the current policy is not going to return consumer confidence to what it was before. We'll definitely see a boost in business confidence because business is really pushing this. This sees vaccination as a way out of this, and it's a fair point of view, and it's certainly a helpful point of view. But as I said, it's not the total solution. We need to think more broadly and in a more nuanced manner. Nevertheless, business sentiment will improve. Consumer sentiment, not so much, a small spike. What all the market will be surprised by is the small bounce, like when we open up, definite, big, sharp, immediate spike in economic activity. This time though, it's going to fall over much more quickly than the previous occasion for the reasons I've outlined. So there could be some short-term boost to the Australian dollar or the stock market on the idea that this opening up policy will work and everything's going to be fine. We're going to have nirvana again. We're never going to have nirvana, and we're certainly not going to have it in the future. This is an approach that is a high-risk strategy. I still think the better strategy is look to diversify your portfolio and certainly be ready to hedge your Australian investment portfolio should there be further signs of trouble in terms of the prices, action of the Australian dollar and the Australian stock market. Clifford Bennett, Chief Economist, ACY Securities, thank you very much.